Hi everyone, welcome to Trading in Zones. I hope you guys are having a wonderful Sunday. Good morning to everyone. Today we will continue on the price action patterns on episode 6 on piercing patterns. So last episode we spoke about dark cloud cover being a pattern which can be considered as a bullish reversal pattern. So piercing pattern is a bearish reversal pattern. It is often known as an opposite to dark cloud cover, but there are slight differences, variations and things which are slightly different when compared to a simple dark cloud cover. In this kind of a situation, when it comes to piercing pattern, it is very important that it covers the 50% because that's the basic thumb rule. There are some patterns which might mean something completely different. Let me quickly open a chart which becomes much easy for us to understand. I've highlighted some and I've kept some ready. So here you can see that this is one of the piercing patterns. You can very clearly see there is a very strong red candle which is kind of confirming to us that the market is pretty bearish in nature, and then there is a gap down opening which happens the next day, pretty similar to how a dark cloud cover where you see a gap up opening and then it starts coming down covering the previous green candle. In this situation here in the piercing pattern on the downtrend, this covers more than 50% of the previous candle, so it moves above 50%, which is very important as a requirement. Steve further says that when the piercing patterns are not really appropriate, there are some other Japanese patterns which are there, which is known as on the neck, in the neck and thrusting pattern. So the image which you are currently seeing, I have actually copied that from his book, which shows that on the neck is a small green candle which appears after a big red candle, but it is a gap down, but it kind of comes very close to the body of the previous red candle, and then in the neck is like maybe it is covering about 10 to 15% of the previous red candle, and then the thrusting pattern is that it does not beat the 50%. These are potential bearish patterns. When he says potential bearish patterns, they might not be a reversal at all. So that's the reason it's very important for a piercing pattern to beat that 50% mark, because there are other patterns which are other psychological patterns which might be a bearish continuation pattern. So it's very important that we make sure that the 50% is crossed. I hope you have a very fair clarity. This is a pattern which is known as piercing pattern. It comes during a downtrend, so you will always see a big downtrend going up from the recent up move. So this was the up move, and then this is the downtrend which is happening on a particular stock, and then you see a gap down opening and a strong reversal happening. And when you see this kind of a reversal happening, you will see the movement further which comes on the stock. Okay, and this reversal kind of happens on a particular support and resistance level which can be previously seen as well. If you ever get to draw a horizontal line on this particular chart, you can see the wicks which are getting created here, which shows that there is a very strong demand in play and the demand has kicked in, and you will also see a piercing pattern appearing right in that particular area where earlier it had created a strong pin bar and an up move had come into play, and a similar area we see one more reversal coming into play and the stock moving up. Okay, this is an example of HCL Tech which had happened in the month of 27th of April is the phenomena occurring. So I can show you some more examples like on India Bulls as well. We can see that on the 20th of March it has just pierced the 50% mark, and then you can see a significant up move which has come in. So this is another example. How is it different from a bullish engulfing? You can see this is Canara Bank, again a significant downtrend. Bullish engulfing also opens gap down. You can see it is open gap down, but it covers the entire candle. Wicks might not be of reference, which I've covered in extensive way on the engulfing pattern video. You might want to go back on this playlist and have a look at that. Okay, At times, you might also see a strong bullish engulfing, which might cover the wick as well. But these are engulfing patterns where it covers the entire body. The body of the candle is in concern, and the body of the next green candle is in concern, which covers the entire candle. So that is the main thumb rule for this particular charting. I hope you got a fair idea in terms of what is bullish engulfing and bearish engulfing. And one more example of piercing. So you can see around 50% mark on this particular candle. If I have to mark it, would be approximately somewhere over here, okay, which is the 50% of this body. If you want to mathematically calculate 50%, you can just look at the open price and the close price and divide that by 2. Alright, you can add that up and divide that by 2, you get the exact price. But roughly you can see that around 328 and around 313. So 313, 20, 328, 15, around 7 points. So around 320 from 323 approximately, which becomes the midpoint. So it is kind of pierced, and you can see how the movement post the piercing has happened to see the further up move. Just to give you an example, it is gone up all the way on Bio. So this is how a piercing pattern comes into play on a downtrend. Key differences, once again, there are on the neck, in the neck thrusting pattern. So 50% break is compulsory on a piercing pattern, and piercing pattern appearing on a support or a resistance becomes very important as well. Piercing pattern crossing the level again on a support and resistance level becomes a very significant reversal view, and you can see the bullish behavior coming into play even when the price again fell down on the 23rd of March on India Bull Housing Finance, and then the price starts moving up. So you can see that once the pattern is broken, it is holding that particular level very significantly, and the price never came back there. Alright, so I hope this video makes justice to what Steve tried to explain in his book in terms of piercing pattern and multiple different types of piercing pattern as well. This gives you a fair clarity in terms of what you need to look at and how you need to identify them. Okay, I hope you understand the difference between the engulf. Engulf very clearly makes it a point that the candle is completely covered by its body. So the red body is covered by the green body, while you will always see that on a piercing pattern, you will only see it closing 50% above the previous candle, and it becomes a very strong reversal level. On the next chapter, we will start covering about stars. So we will cover about the evening star, morning star, doji and shooting star. So stay tuned for more candlestick patterns and more understanding. I hope you will be able to identify these patterns on the stocks and make good money. Thanks guys. Have a wonderful weekend.